this is the thing that's so confounding, is that this metal is traded in the cash market, and yet, and it's for immediate delivery, and yet we can see that that there's no, according to these statistics, there's no metal available in the market to back these OTC contracts for ownership and delivery of metal.
Monaco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with David Jensen. You can find his work on Jensen David Substack. He's a precious metals and mining analyst, and we've had him on before, and he's written something about platinum a day or two ago, that basically there's no physical platinum left in the LBMA or in London. So David, welcome back, and maybe we can jump right into the platinum situation.
Sure. Great to be with you again, Mario. Thanks for having me on.
You're welcome. So I'm going to bring up your article, and maybe you can go over it a little bit. And then also we can discuss whether this is kind of a harbinger for gold and silver as well.
Sure. I think that probably, if you can scroll down to, what is it, the second graphic? Sorry, the third. Let's go third. Yeah, the third one is good. So that's U.S. platinum stocks. And these data come from Dr. David Davis, who's a metals market analyst. He's a South African, and he's been delving into these numbers. So the data is from a couple of years ago. His article was published a couple of years ago at a site called Octus Precious Metals, which is a Singaporean investment website. So what we can see here is that in the early 90s, the U.S. started to build platinum stocks. These stockpiles increased up to roughly 8 million ounces, and they've been static there for, since kind of like the late teens. And then if you scroll up and take a look at the Chinese, roughly 15 years later, China followed the same pattern, is that they started all of a sudden to accumulate these platinum stocks. And in terms of the American accumulation, it goes kind of counter trend to what we know was happening in the 1990s under the Clinton administration. The Clinton administration basically disposed of all American strategic stockpiles, critical metal stockpiles. So while the critical metal stockpiles were being disposed of by the Clinton, or by Bill Clinton, we can see that there was large accumulations of platinum, which is kind of counter trend to what you would be expecting to be happening at that time. So I think what we're seeing here, and both China and the US, and maybe you can scroll down now to look at the global stockpiles. Yeah, so looking at the top two there, the orange and the red, China is orange and the US is red, that they've both accumulated the vast majority of the world's platinum stocks to this day, and there's virtually nothing left in the rest of the world. Now, looking at the pattern in terms of the rapid increase and then stabilization of the US, and then China following the same pattern, they're still growing somewhat, but it looks like the majority of the growth has slowed. My sense is, and the fact that the growth started in the early 90s, so we're talking, 35 years ago, is that this appears to me to be not accumulation of bars held in stockpiles, but it looks to me that, I'm inferring here, but that there's some technological application that this metal has gone into. There's no reason for these large stocks to be accumulated. It's not been accumulated by the U.S. government, so it's been done privately. But it looks to me that this metal has been found some application that we don't know about, but both the big, the heavyweights, China and Russia, have followed the same pattern. So I don't think that there's vaults absolutely stuffed to the brim with platinum that's available to market right now. So that's the first point. The second point is, if you can go down to is it the third or fourth chart, the global chart, was that if we go to that red arrow, we can see there that that's UK and Western Europe, and that they basically and by the way, these stats are import export stats. So imports minus exports gives net flows. And Dr. Davis's work here shows that the UK stocks were basically tapped out in 2021. Now that has implications for London, because this is the world's largest physical platinum and palladium market. The LPPM is the world's largest market, and the LPPM has published nothing in terms of stockpiles, and I guess we can see maybe why, if there's virtually no metal there, and they have published nothing in terms of daily turnover. Now, I posted an article, I don't know, 3-4 weeks ago, where the LBMA did post dollar volume in terms of daily trade in London on the London platinum market. And by working backwards from dollar volume on a quarterly basis and using average monthly platinum prices, we could determine that they were trading roughly 3 million ounces of platinum every day in the London market. And these contracts, of course, are in the form of these OTC promissory notes for immediate delivery. So that is a kind of an interesting initial point, in that how can you be trading 3 million ounces of claims every day if you've got no stocks of platinum available to market?
And I guess one of the reasons why you're looking into this is because platinum, as you point out in the article, has increased by 40, the price has increased by 45% since April this year. And and you also note that 90% of the global mine supply of platinum comes from South Africa, Russia, and Zimbabwe. So
Right.
with the geopolitical situation, what you're saying is that LPPM, are they like, are they
They're a
part of
trade
the
association.
LBMA? Are
Yeah,
they,
they're a trade association, just like the LBMA.
and it's the same suspects, the bullion banks that trade in there as well?
Yeah, of course.
Yeah.
So I mean, they're traded, these OTC promissory note contracts in the cash market. See, this is the thing that's so confounding, is that this metal is traded in the cash market, and yet, and it's for immediate delivery, and yet we can see that that there's no, according to these statistics, there's no metal available in the market to back these OTC contracts for ownership and delivery of metal. And we have another data point that we can go to in terms of, well, is this really true? Is this even possible? And that's basically what happened in July. We saw that the COMEX inventories jumped roughly 300,000 ounces in the month of July. So I think there were they went from like 250 to 550 in round numbers. So they jumped 300,000 ounces. And in the month of July, we also saw this platinum lease rate. I think the highest number I saw was 44% on a day that it jumped that high. And then we saw, at the same time as the inventories in New York went up by 300,000, we saw the ETF holdings had been rated for 350,000 ounces. So there is another data point that, wow, it's like, we know that there was a movement of 300,000 ounces to New York, and it appears that it all came from ETFs, and that this demand drove this lease rate in London for platinum to over 40%. Now it's a couple of days ago, it was up to 15% again, had dropped to 10%, and then it was back up to 15% again. But it looks like, that's kind of confirming data that we see there in terms of support for this fact that, we've basically got in London, we've got a drained, in Europe for that matter, we've got a drained bathtub of supply, and it's coming from other sources to maintain appearances, all the while that this LPPM. By the way, the contracts are traded on this LPMCL, the London Precious Metals Clearing Limited, which is owned by the four major bullion banks. So it appears that this is this is worse than I had anticipated, Mario. I
Yeah.
thought that there must be something available, but it appears that there is
Yeah.
literally next to nothing available in terms of backing this paper whirlwind that's traded in London.
And could it have been because you said there's some kind of technology that the U.S. and China need because of the way they increase the holdings of platinum? Isn't it related to catalytic converters over the last 30 years for automobiles, or that wouldn't be part of that?
No, I mean the platinum price did spike, in the late 90s there. Sorry, I gotta get my platinum chart up. Can't remember the date, but the Chinese buying did cause the price to jump, and that price jump and the shortage of platinum in the market caused a switch from platinum to palladium in terms of gasoline catalytic converters. And what they found was that with palladium, that they could get much higher performance out of palladium than from platinum in the gasoline catalytic converters. Sorry, I'm just going to pull up a chart here for
Yeah,
platinum.
I've got the chart here on this U.S. Platinum chart. It's got the red line is the price. So
Oh, sorry.
is that the one?
Yeah, that'll do.
Yeah, that'll
Yeah,
do.
so, sure. Yeah, so yeah, 2008, we can see the price, how it ran up there right from the early 2000s.
Yeah.
And that run up in the price caused a switching to palladium, and then the palladium was found to have much higher performance in the normal internal combustion engine application. Now, platinum is still used in diesel engines because palladium tends to form a buildup, a film on the catalytic converter, and the platinum sheds it. And then also the platinum has much higher performance in lower temperature regimes, and they're finding that it's required for hybrid engines because of the frequent stop start. So we're seeing now that the battery, the bloom has come off the rose on the battery technology cars because of the poor performance, and I think the market is led by Toyota is moving in the direction of hybrids as a bridging technology until adequate batteries hit the market. But I don't think that it was an internal combustion engine catalytic converter demand. It began in the early 90s for America, that they built up they started to build. They made a concerted effort, clearly, to build up these stocks. And I don't know what it is, Mario. I don't have the answer in terms of what caused that, but it appears to me that there's some demand that we don't fully know about that has necessitated America and China to accumulate these large stocks. And I don't think that it's sitting in bars available to market right now. I think it has some application, some necessary application.
So at the end here, you say of the article, the run on platinum is not over, but the London market soon might be. And you say those cash spot promissory notes for ownership of physical platinum and gold and silver and palladium that are daily traded by the millions, tens and hundreds of millions of ounces in London are not looking very good for now. Could you tell us what your feeling is, whether what's happening in platinum and the fact that all this platinum is being drained from London, could that spill over to gold? And I mean, we saw earlier this year, David, back in January, that there was a delay of 4 to 8 weeks to deliver the spot gold on the LBMA.
Right. So we have that data point on gold and also on silver that there was substantial delays because the metal is heavy. But now also, this heavy metal platinum is following the same pattern. But I think the platinum data to me is the most distinct in terms of the implications. Um, I think the platinum is basically dropping the kimono on the entire London market here. All of a sudden, with this data, we can see that there's virtually no inventory of platinum of size in London that's available to market. A relatively small draw of 300,000 ounces sent the lease rate through the roof. And the lease rate is telling us that there's inadequate physical metal available to market, and they were pulling this metal out of ETFs. But as you know, yeah. So, anyways, the bottom line here is that we're being told and we're being shown that while there's millions of ounces of platinum being traded, that a small millions of ounces of platinum being traded a day in these immediate ownership, immediate delivery contracts, that if you took out 300,000 ounces, that you've completely distressed the market. And so that is giving us a very, very distinct illustration of nonsensical structure of the London market in terms of trading these promissory notes, which are unbacked, and everybody's running around with their certificates saying that they own the metal. And then this minuscule draw in terms of global average demand gives the market a dislocative experience. So I think that is going to knock on from platinum into palladium and silver at some point. The platinum situation is not going to get better in the immediate future here, and the market is quiet, and it's operated by individuals participating in the global market. And I think we're going to see some discrete movements here over time as the fraud of the London gold, silver, platinum, and palladium markets becomes clear. That quietly but effectively, that the metal is going to be swept away that's available to markets, and that's going to be ultimately the end point for the London market, where they can no longer sell paper and digits and have that form a artificial supply and a price depressive impact on the global market.
Yeah, and I think what would happen as well, and you think platinum is going to continue to squeeze higher, and that there's not much physical, if any, left in London. That will spook traders and speculators and investors as to whether there's palladium as well, silver, and eventually gold. Yeah, that wouldn't shock me, because we've covered here with you, David, how leveraged the London market is.
Mm-hmm.
Yeah.
Yes, and it's the hundreds of millions of ounces of gold and billions of ounces of silver are traded every day. And when you look at platinum with averaging 3 million ounces a day in Q1 this year, if 300,000 ounces distress the market, you've got a good benchmark there in terms of how little actual metal that's there. It's basically a fairy tale that's been created to set prices and to subdue interest in these metals.
And is it fairly easy to keep track of the lease rate in platinum? And do you think the lease rate will be also like a signal for a signal for an impending shortage of silver and gold? And I guess it's not the LBMA. They're not very transparent on these lease rates, are they?
No, I mean, everybody about 10 years ago dropped publishing the lease rates. Commerce Bank used to be very reliable in terms of publishing that data. And then just one by one, it's just disappeared from being freely available to the market. You can still get the data from a Bloomberg terminal. You can look at the London forwards and interest rates and derive it yourself in terms of the implied lease rate in London. There is a source of the lease rates. This Bruce Ikemizu, he's the head of the Japan Bullion Market Association. And he's got a website there that's Bruce Ike, IKE Gold, at Bruce Ike Gold, Ikemizu. I guess that's where the Ike comes from. And he has been periodically, every week or two, publishing the lease rates for the four precious metals: gold, silver, platinum, and palladium. And I mean, what his data is showing is that the most recent data is that silver and palladium are running 3+%. Platinum's around 15%, and all of those are silver was a couple of weeks ago was 6%. So these numbers they're elevated, and they're telling us that those metals and silver, platinum, and palladium are not held by central banks, so it can't be leased into the market to cover up the demand story there, right? Which is what we've seen with gold. The central banks stepped in; they hold such large stocks that they can temporarily plug the appearance of the demand for gold. They can hide that, but silver, platinum, and palladium, there's no large stocks held by the central banks, and they are showing that they are under stress. And I'm expecting that to compound with time as more and more investors and users of these critical materials start to recognize that the only safe way to invest in these assets is to directly hold them as physical assets.
Well, David, it was great talking to you about this. We're going to keep track of these lease rates as best as possible. And I would note as well, David, that as we speak here today, spot gold is near 3,400. Silver has started to catch up again, but it hasn't broken through 40. But I think the technicals and the charts look pretty good, and maybe that's why, because of this paradigm shift from paper materials or precious metals to real. So, any final thoughts for the viewers, David?
As always, secure physical and hold it directly. That's that's the only thought that I can give. But it's these are big markets that were established to fix prices and to fix the worldview of investors as these massive asset bubbles were blown. And they're as always, frauds always collapse, and the price control of these precious metals is in the process of failing right now. Like we're midstream on this stuff, we're watching it. And as they lose control of the fake story of the price and the value of precious metals, it's not just. I mean, gold and silver were critical in the 1970s in terms of people were selling bonds and buying gold and silver, and it drove the interest rates to 19%. And what they're going to lose control of is they're going to lose control of the bond market as well as losing control of the gold and silver, platinum, and palladium market prices. And at that point, this investment, the serial asset bubbles that have been blown by the central banks are going to be at the end, and then we're going to be left with the, with the rubble that's left afterwards. So um, the escape pod is in terms of asset values is holding these assets directly.
Great, David. Thank you very much. And we'll talk again soon.
You bet. Thanks, Mario.
You're welcome.